Hey guys, this is Bill. I often get asked, should I buy rental property right now or should I wait for some of the turmoil in the interest rates to calm down? Let's talk about it next. All right, folks, welcome in. I identified a property that I am interested in purchasing, but I think I might wait. The market is in turmoil and the rates, as you all know, have risen sharply over the past year. My buying power is not what it was just a few years ago, and I'm really concerned about the economy moving forward. Same here. No, that was not me talking, but it sure could have been. That is a summation of what I have heard from several of my peers who are in the real estate business. That line of thinking is valid and anchored in plenty of reality, Joe and Jay running around. But there's more to be considered. Now here on the channel, another area we cover is the stock market. And a famed investor we're familiar with was recently interviewed, and he left some golden nuggets of truth that, in my opinion, a real estate investor should embrace. So let's take a listen to this interview on CNBC with elite stock investor Ron Barron of Barron Capital, his own firm he's managed for over 40 years. Barron is perhaps most well known for his early involvement with Tesla stock. Now, in the midst of discussing not being overly concerned by recent stock market pressures and uncertainty, his comments were then directed, and perhaps most pertinent to, the real estate investor. Take a listen.
That's the thing that sticks in my head.
So don't worry about the headlines.
Yes.
So you're not worried about inflation, concerns about the potential for war, geopolitical issues with China, with Ukraine and Russia, any of those things at this point? You're just looking at what?
I believe that inflation will always persist and always has persisted, and it's a very large part of our economic model. So I think that inflation long term is 4 or 5% a year. That's what you got to think about, 4 or 5% a year. That means that everything doubles in price every 14 or 15 years. Everything. It's tuition, it's labor, it's minimum wage, it's your car, it's your house, everything. And one of the good examples I have is, I gave a whole bunch of examples in a chart, but you guys couldn't figure out how to show it as a chart. But one of them is my parents. I'm born in 1943, and my parents bought their first house, and we lived in a garage, on top of a garage in Bradley Beach. And then we bought our first house in 1948, 5 years later, and it was for $5,000 in Wanamassa. And then and we had that till 1955, and my parents sold it for $10,000, and they bought a $20,000 house, which is sold for $150, 10, 15, 20 years later. The bottom line is, I looked up on the internet what this house is worth. This house at 1122 Grassmere Avenue in Wanamassa, $529,000. So 100 times. That's 6.1% a year. And if I looked at the other house that they had, which was for $20,000, which is now worth $1 million something, that house is 5.1% a year. Everything you look at, state, tuition, cars, everything, 4 or 5% a year.
I think Barron is spot on. Historically speaking, over a period of time exceeding most of our lifetimes, real estate has grown in value. Barron does a great job of pointing this out, focusing on the theory of inflation. Real estate can be a quick success, but more often than not, it is not. It takes time. While the success of an investment is often made at the time of purchase, for long-term investors like myself, even if the market drops shortly after a purchase, over time, given all exterior locational items remain somewhat constant, unless you had a horrifying purchase scenario, the value will grow itself into profitability. Interest rates may remain high. I think they might for a while, or they could even go higher. Hell, I don't even know what I'm having for dinner tonight. But it is the current playing field that we're in. If you have a property you like, you can sort of marry the property and date the rate, meaning the property can be purchased now, and we can refinance it down the road, I'm pretty sure. After all, rates are temporary. Now, the lending market is always unpredictable, so that is always an area to keep a keen eye on. Your thought process can turn upside down in the click of the clock. Appraised values may present temporary issues in refinancing for a period of time when and if rates back down. Have rates fallen due to poor economic conditions? Who knows? So the refinance component may take some time as well, but at some point, with a lowering balance due, you should be in position to refinance the property at a lower rate at a later date. If you want to talk yourself out of buying a property, you can certainly do so. Generally, there are always problems or obstacles for a real estate investor to overcome for the purchase of most real estate opportunities. Buying less than desirable tenants, a problem child neighbor, a nearby busy street, or the potential of a major employer having issues maintaining employment in decreasing economic conditions. The list goes on and on. But if you have identified an opportunity that suits your criteria and objectives, in my humble opinion, the time is almost always now. Buy now rather than wait for the quote-unquote right timing. When is the right timing? Well, I found this interview with Ron Barron illustrated that quite nicely. Well, that's all we got today, folks. Thanks for stopping by. Do drop us some comments on your thoughts. Love to hear your opinion on this topic. It's one that's around everywhere I go. If you found some value in the presentation, please consider liking the video and subscribing to our page. We would appreciate it. Hey, take care, folks. We'll see you next time.